There is a war going on, and I know everybody's thinking about AI, and it's just blowing us away with its capabilities. It's incredible. But the war going on really is between bad fiscal and monetary policy and technology. And the debate and what we need to know about the future is, are we going to have inflation or deflation? Will prices go up or will prices go down? I interviewed an interesting author that wrote a book called The Price of Tomorrow. He's been on my show. And his thesis, because he's a tech guy, is that we're going to have massive deflation. The future is deflationary because technology is making everything cheaper and better. And that's true. But the question is, who will win this war? Will it be the incredible benefits of technology that it brings to all of our lives? Or will it be bad fiscal and monetary policy? In other words, that's inflationary because printing money is inflationary. If you create more currency units and they chase a limited supply of goods and services, all the holders of those goods and services will raise the prices, obviously, right? Because there's lots of demand. Most basic law of economics. So I don't know who will win this war, if it'll be technology or bad fiscal and monetary policy, but it's a war. For sure. So that's what we need to think about in terms of, will the future be inflationary or deflationary? But I would submit to you, and you probably all agree with me on this, is that with artificial intelligence and generative AI, we are at a point that is probably as significant as the internet itself in the 90s. That it's just massively changing the world in ways we don't even know that yet. But what about the elephant in the room? Okay. Well, what's the elephant in the room? It's unemployment. Is it going to skyrocket? Will it be really bad, and will this cause the party to be over? So I took a clip of this YouTube video with Scott Galloway, and it shows the layoffs at the big tech companies we've all been reading about. You know, when Musk took over Twitter, he laid off 80% of the staff. Facebook, Fakebook, Meta, whatever you want to call it, those criminals, they laid off 24% of their staff, right? And on and on. But the question is, compared to what? Are these layoffs really that significant? What most people never think about is this, the next one. Look at how many people they hired during the pandemic. I did say plandemic on purpose, by the way, okay? So, I mean, these companies hired so many people. So the layoffs compared to the hiring in just the past couple years, the net is still a huge increase in number of employees, okay? So I went to one of my lenders, I got on Zoom with them, and I thought, okay, what if the worst happens? Could someone qualify for a mortgage on unemployment insurance? The answer might surprise you. Now, no lender is going to give you a loan if you're unemployed, right? But just with DTI, the debt-to-income ratio, I've owned a few mortgage businesses over the years, right? Would a lender qualify you getting just your unemployment insurance from the government? And the answer is actually yes. Okay, so John and Jane Doe go and buy a house, $350,000 house with a $280 loan amount, and here's their employers, and here's their unemployment insurance income, approximately. It varies by state, it's complicated, whatever. Okay, but say they both get $2,300 a month unemployment, then they have some car payments, some other debts, right, sort of typical thing. Well, their debt-to-income ratio, front end, back end, is 36% and 49%. The software approves them for a loan. Not the loan they'd get today, the tens of millions of loans they got during the COVID era. Because that's what matters more than today. Many more people own houses with those mortgages than today's mortgages. That's the important thing to know. So you see this national payment to income ratio is at a near record high. If you get the loan today, yes, that's true. But not for the tens of millions, the massive bulk of the housing market that got their loan during the COVID era. And here you see it again. This looks terrible. Yikes, it's so bad. But this is what we really should be counting. And that's what most people aren't telling you. So inflation-induced debt destruction, super important concept. It's like getting in a time machine and going back to the future.